As you know, there is an inverse correlation between the dollar and almost all other financial instruments, including commodities. When the greenback rises, other assets lose ground, and vice versa. That's exactly what happened yesterday. Shortly after the meeting of Bank of England policymakers, the pound sterling started to decline, bringing Europe's single currency down. This in turn led to a sell-off in almost all markets. Oil was no exception and fell below $75 per barrel. In addition, market sentiment in the oil market was affected by statistics reflecting the prospects for energy supply and demand. Early in the week, oil prices jumped after the Biden administration announced its decision to cancel the previously mandated sale of about 140 million barrels from the Strategic Petroleum Reserve to curb rising energy prices. In addition, U.S. authorities revealed their intention to purchase crude to refill oil storage tanks later this year. However, the asset's upside momentum fizzled out by the end of the week, weighed down by data from the International Energy Agency, and the report showed an unexpected increase in the U.S. crude oil inventories, which raised fears of a weakening demand from the world's largest oil consumer. Besides, trade data from China showed that crude imports dropped by 16% annually to 10.6 million barrels per day in April, adding to fears of a slowdown in Asia's biggest economy. According to the trading chart, range-bound trading between the levels of $75.5 and $77.5 was replaced by a breakout of its lower boundary. As a result, Brent crude suffered losses, which contributed to a step-by-step recovery in the downtrend after the recent correction. Nevertheless, fundamental analysts are confident that the market will see a rebound today. They expect oil prices to rise above $75 per barrel. Likewise, gold prices fell to nearly $2,000 per troy ounce amid a stronger dollar. Anyway, gold was bound to slide a bit, coming under pressure from an interest rate hike by one of the key central banks. As is the case with the oil, fundamental analysts anticipate the yellow metal recovering and returning to the area of $2,030 per troy ounce. However, this is unlikely to happen today. A batch of new economic data from the United States reflected signs of easing inflation and a cooling labor market in the United States. This, in turn, reinforced expectations that the Federal Reserve would still pause its tightening cycle at its next meeting. Gold would then regain its investment appeal, beating out U.S. debt securities. The ruble was also affected by yesterday's rally in the dollar. However, before rising above 76 rubles, the dollar dropped to about 75 rubles in the early trade. Market participants are in no hurry to buy the ruble, waiting for some reaction from the Ministry of Finance, which viewed the 75 mark as a target level last year. After that, it announced foreign exchange interventions. Since then, the Ministry of Finance has remained silent. Even when the dollar topped the level of 80 rubles, the government agency left no comments. Now the situation has changed somewhat, and the ruble is steadily gaining value. With the currency approaching the target level, investors are awaiting some reaction. If there is no reaction from the Ministry of Finance, the ruble will probably go below 75 rubles per dollar in the near future. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.